Hello traders, this is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. This video is going to speak on a full Forex 24-hour schedule. Let's get right into our disclaimer. Do your own research. My content is intended to be used for informational purposes only. Please do your own research before making any investment or trade based on the information provided, and consider your own personal circumstances. You can talk to a professional or do your own independent due diligence on verifying any information that you find on my channel. This is a message for myself, Deontay, as I am not a professional. With that being said, let's get into our lesson. The Forex market is comprised of several sessions. Each one of these sessions have a specific characteristic to them. A trading idea or model can be structured around these sessions. Depending on your life schedule, you can focus on one or multiple sessions as a trader. I recommend studying one session for a few months for anyone looking to comprehend price action within a specific time of day. A full Forex day includes these several sessions: Asian session, London session, London lunch session, New York session, London close session, New York lunch session. Note, all these times are in New York Eastern Standard Time. Each one of these sessions will not move in the same manner. Let's break down each session. Here we are looking at GU, which is British Pound versus the US dollar. This is what a full Forex day looks like. I have color coded all the sessions. Green for Asian Open, red for London Open, purple for London Lunch, blue for New York Open, orange for London Close, and gray for New York Lunch. Let's start with the Asian session. The Asian session is primarily known for its characteristics of a consolidation. Market makers are going to hold price sideways, especially if you're trading pairs that are crossed with the US dollar, or the US dollar is the base currency of the pair that you are speculating. However, if you are trading pairs that are crossed with Japanese yen, you may find an increase in volatility, which can lead to a trade setup. Pairs like AJ, EJ, and GJ can produce good trade setups during the Asian session. The market makers are building up sentiment for a bullish or bearish bias on retail traders. We will speak about sentiment later in the video. During the London Open, we typically see characteristics of a protractionary phase, which is also known as a Judas swing or fake move. Typically between 1 a.m. to 3 a.m., we want to see price take one side of the market, buy side liquidity or sell side liquidity. The market makers are creating a Judas swing manipulation on retail traders. Once we see one side of the market taken, we want to see if a trade sets up on a lower time frame, like the 15-minute, 5-minute, 3-minute, and even 1 minute. Normally by 3 a.m., retail traders have been trapped on the wrong side of the market, and the commercials move the price in their intended buy or sell program. Overall, London session is a fake out on retail traders. The commercials do not want retail traders on the right side of the market, so they convince retail traders on one side of the market. Normally that's the wrong side. London will either post the low of the day if the overall trend of the day is bullish. London will either post a high of the day if the overall trend of the day is bearish. During the London lunch session, we can be faced with characteristics of a deep retracement or another phase of consolidation. I personally do not trade during this time period intraday, as I do not view it as valuable enough. This is not to say the market couldn't give another opportunity to get in trend with the commercials, but you do run the risk of a deep retracement that can hurt you if you over leverage. The New York Open session has characteristics of a retracement followed by an expansion typically. Traders can also be faced with the characteristic of a New York reversal, taking out the London low or high. At 8:30 a.m., the CME Group Equity Index opens for trading. The CME Group is an American global market company, which is the world's largest financial derivatives exchange and trading asset classes that include commodities, currencies, energies, interest rates, metals, stocks, cryptocurrencies, and futures. This is the impact on the foreign exchange market, and we can expect a retracement to form just prior or after 8:30 a.m. This is when central bank traders are seeking trades, and we tend to see an increase in trading volume. The New York session overall will give you a retracement followed by an expansion or a reversal that takes out the London high or low. London close session has characteristics of a reversal to the daily range expansion. It also tends to be the high or low of the day depending on the trend. If price action was bullish for the day, London close will have higher odds of forming the high of the day. If price action was bearish for the day, London close will have higher odds of forming the low of the day. By this time, many central bank traders are taking profit for the day, which is why we tend to see volume decrease around this time of day. There is also no news drivers that come out this late into the trading day. London close can be impactful for reversal days like Thursdays and Fridays because those tend to be weekly counter trend days. If you're able to catch 20, 50 pips going into the London close, take partials or bank all. You can lose much of your profits during London close. The New York lunch session has characteristics of a consolidation. Now, this doesn't mean there aren't moments where the market does trend in one direction, but primarily you're going to see the market move sideways. Most of the trading action has occurred in the AM session. During the session, avoid trading. Here, most retail traders are looking for a setup, but they aren't going to get much bang for their buck. This is a dead zone where commercials are repricing for the next trading day. Avoid this session at all costs. On a bullish day, we typically want to see a small range New York lunch session and Asian session. Going into midnight, we want to anticipate a fake move on retail traders because of the sentiment buildup around the Asian session. London should post a low of the day, while New York session gives a retracement and leg higher going into London close. London close should post a high of the day. This is vice versa when bearish. Let's take a look at UCAD of an example of a bullish day. We're looking at UCAD, which is US dollar versus Canadian dollar. So the base currency is dollar and the quoted currency is Canadian dollar. Like I said previously in this video, anything that is based or quoted or crossed with the US dollar, don't expect much during the Asian session. If you're trading pairs that are crossed with the yen, you can potentially find greater setups during the Asian session. But if it's based or crossed or quoted in dollar, do not expect much. Market makers are going to hold that price action sideways, and you're going to be met with the phase of consolidation during the Asian session, 8 p.m. to midnight. This is where sentiment is being built up on the retail traders. So you have the Asian session high, which is going to be buy stops, which could also be noted as buy side liquidity. And then you have the Asian session low, which can be noted as sell stops, or also known as sell side liquidity. Now, retail traders going into the new trading day are going to use logic as breakout trades, meaning if it breaks this low, I'm going to go short. If it breaks this high, I'm going to go long. However, us as being informed traders, you watching this video, you are more informed. You know that a fake move is going to occur around this time period, 1 a.m. to 3 a.m. Typically, not saying every single day, London's going to give you a fake move and it's going to move in that intended direction. However, use this as a guideline going into each trading day, especially if your bias is on the right side. If you know that it's bullish, you know that you're going to get some type of fake move to the downside. If you know it's going to be bearish, you know you're going to get some type of fake move to the upside. Now let's go into the rest of the trading day and see what occurs. You can see sell stops are taken, right? Retail traders are normally going to do what? Go short. They're going to go short somewhere around here and place their stops above here. That is the wrong thing to do. Sell side has now been taken. What is left? Buy side. This side of the market has been mitigated or liquidated. This is the only side of the market that remains now. So market makers are now going to convince, right? They have enticed retail traders to now go full margin and over leverage, right? These are bad habits some retail traders have. They're going to now think that this market is now going to sell. But we know that's not what is happening here. We know that there is a fake move, a Judas swing, a protractionary phase that's happening between 1 a.m. and 3 a.m. Typically, that's when it occurs. Just a time frame. This is just a window of time to give you a guideline of what you should incur or anticipate going into the trading day. Now, retail traders are in short. Commercials are now going to increase their longs and change into their buy program. And as you can see, the retail traders are stopped. Those retail traders that went short here have been wrong. This is where 90% of the retail traders are going wrong. And that small percentage or 10% is getting it right. They're buying at the high of the Asian high right there. So remove this and we're going to keep going into the rest of the day. Now, next we have the London lunch, and we know that characteristic is normally going to be a consolidation or a deep retracement. So let's see what occurs. So now this is 5 a.m. to 7 a.m. We should anticipate consolidation or some type of retracement because we got this expansion, right? So some type of retracement down into this range should occur. As you can see, it does. Got a nice retracement back down to either what? A fair value gap or a last down close candle, which is a bullish order block. Now we're going to go into New York Open, which we can anticipate is going to be an expansion right after a retracement. So we have the retracement here. We got a slight expansion and then a retracement here. That's 830 right here. 830 CME Open. Look how dramatic price increases. Runs low. So we get a huge retracement now. And now we should expect what? An expansion going into London close. And we got that expansion going into London close. And London close, if it's, as you can see, a bullish day, this should post a high of the day. Not every single day does London close give you the high of the day, even though the daily trend is bullish, because it could still create the high of the day after London close or after 12 p.m. It can make the high of the day around 3 p.m., 5 p.m. It's not every single day that it makes the high here. So you can anticipate either a reversal here, or you can take profits if you have made, like I said, 20, 50 pips here. Because then if the market were to reverse drastically, you'll be upset at yourself for not taking anything off or taking partials. So this is an example of a bullish day. So when it comes to intraday, here are some entry ideas. So when bullish, buy at or below midnight opening price, buy below the Asian session low, buy after a 15-minute swing low is broken in the New York Open. Some entry techniques when bearish, sell at or above midnight opening price, sell above the Asian session high, sell after a 15-minute swing high is broken in the New York Open. Here are some stop loss ideas for intraday trading. When bullish, place a stop loss 15 pips below a discount PD array. Place a stop loss below a previous daily low. Use a 40 pip stop if trading off of the break of the Asian session low. Some techniques when bearish. Place a stop loss 15 pips above a premium PD array. Place a stop loss above a previous daily high. Use a 40 pip stop if trading off of the break of the Asian session high. This brings me to the end of the lesson. Hopefully you learned something new today. As always, I'm going to leave you guys off with a quote. Knowledge is power. Information is liberating. Education is the premise of progress. Marcus Garvey. Peace.